It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, breaking down for you the Australian property market. It was crazy out there yesterday in retail lanes. How are you finding it at the moment? The Christmas trees are selling out, the Christmas music is ringing in my ears, and the property buyers might have had enough until the new year, or is that different where you are seated from? It is a Tuesday, December the 9th. Good morning if you are on the Gold Coast. A record $5.2 billion in tourist spending has ignited unprecedented demand for Gold Coast apartments. This from PropTrack yesterday, fueling fears that prices could surge even higher as supply struggles to keep up. Now, thousands of cashed-up holiday makers are set to descend on the Gold Coast this summer, creating what some agents are saying will be one of the busiest sales periods in years. And Tourism Research Australia reports 6.5 million domestic visitors pumped in $3.7 billion into the local economy in just the first half of the year, while just under 650,000 international travellers spent a record $1.5 billion in the year to June of this year. And let's not forget about the poor old locals, because overseas investors are going to be competing with you. Now, coming soon, we've got the 2025 Summer Series of Real Estate across the Christmas New Year break. And this morning, we are going to take you back to exactly 12 months ago, December the 9th, 2024, to listen in on what we were talking about this time last year, because there was a lot going on.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us.
And this year, 2024 really did defy expectations, marked by ongoing uncertainty around those damn interest rates. Let's right now catch up with Jacob Kane again. He's been on the show before. He is the REIV president there in Victoria. He is also on the board of the REIA of Australia. And good morning to you, Jacob. Welcome back to the Real Estate Breakfast. How has your 2024 year been?
Great to be back on, Craig. Thank you so much for the invite. Like your introduction, it's been a year of surprises, I suppose. Not all bad, but certainly some headwinds that myself and my colleagues throughout much of the country have had to navigate here in the property space. As you've noted there, we were surprised by a raft of different things, whether that was persistently high inflation and consequently continued high interest rates, shift in the hierarchy of, most expensive capital cities across Australia. We've seen some incredible performances from our capitals like Perth, Adelaide and Brisbane, overtaking Melbourne in some instances. And again, that really challenging context for whether you're a home purchaser or a renter, around housing affordability and even now access to homes. There's continues to be a shortage of affordable homes for people out there looking to rent or buy.
Yeah, it's, as I say, in any calendar year, very hard to try and do the whole prediction thing. I have spoken to so many, Jacob, over the last few years, economists, and they say to me quite openly, sometimes it is guesswork. You just don't know what the year is going to do. And I think as we head into 2025, without a doubt, there's going to be some ups and downs and possibly some things that we haven't had to contend with before. But let's just take a look and break down some of these areas that were problematic. And we'll start with those interest rates because they remained high. Predicted rate cuts last year, as I said, they did not materialise, with the cash rate holding at 4.35% due to persistent inflation. Optimism about falling rates influenced buyer behaviour, but affordability, as you said, remained strained, didn't it?
Without question. We've got one of the most unaffordable housing markets in the world. You have a look at based on the metrics of, income to cost of servicing and purchasing, servicing a loan and purchasing a home here in Australia. Sydney sits at second in the world for least affordable. And Melbourne, despite the recent movements in terms of median prices, sits at seventh in the world. So getting into the marketplace is incredibly difficult. It's incredibly expensive. And as long as the interest rates have stayed at this level, it's made people question whether or not they're capable of and willing to enter into the housing market, whether that is as an owner-occupier or an investor. Despite that, interestingly, we've seen some incredible growth in terms of values in those cities that I mentioned before. Now, the reason really for that is that the affordability picture or piece of the puzzle has meant that people have looked in different directions. They've looked for the most affordable markets or the more affordable markets. And as I mentioned before, Melbourne and Sydney just incredibly expensive to get into, and comparatively, what you can realise in Perth or Adelaide or Brisbane is a fantastic home at still a relatively more affordable entry price point.
Yeah, and the other thing in all of this is these two words, sticky inflation. We've heard that over and over in 2024. One of the things, the pieces, the talking points were inflation. Lingered longer, didn't it, than expected, driven by supply chain issues and energy costs. I mean, have we focused more on energy costs than ever before in 2024? Relief, of course, came mid-year, with inflation hitting the RBA's target range of 2 to 3% by September. So in all of that, the sticky inflation really did sort of get very sticky throughout much of the year.
Absolutely. And look, I think even the most recent figures showed that growth within the country has slowed very, very significantly, even dangerously, you might say. I know the Treasurer is out there saying that, yes, we continue to be in a technical recession and the level of growth is not where they want to. So we're actually below where we should be. And I think personally that points to a problem really with the way we try to tackle inflation. And that's with a singular mechanism of interest rates. That's kind of been the approach. Fiscal versus monetary policy is problematic because really the reason we've seen such a slow reduction in the rate of inflation is because interest rates only impact a certain segment of the entire society. It's really within Australia, you could basically cut it into thirds: those with a mortgage, those that don't have a mortgage that own their property, and then another third that effectively rent. Now, disproportionately, the weight of interest rates and the burden of trying to tackle inflation sits with that a third of the population that has a mortgage. That trickles down into the renting segment of the population as well, who really, one of the most significant underlying factors in inflation has been the increase in rents. So renters across Australia have really done some heavy lifting in that regard. You can argue about the monetary versus fiscal and the efficacy of better sort of policy around that could have tackled it. But the product is now that we're looking at a recessionary context that we're in, and the RBA, I think, the clock is ticking on whether or not they're going to potentially mismanage this situation as well, if they haven't already. And the calls for interest rate cuts are going to have to increase.
And I want to come back to Melbourne's market struggles, because you're based there in Melbourne. Unlike other cities, Melbourne's property market weakened even further in 2024. Median house prices dropped 1.5% last quarter, creating opportunities for buyers amid this softening demand. I think no question at the moment that in Melbourne, buyer's market.
Yeah, I won't disagree with you on that one. A number of factors that are contributing to that sort of situation that we find ourselves in. Like I said before, Melbourne was already incredibly unaffordable, sitting there 7th in the world in terms of that rating effectively translates into something like desperately unaffordable. Now, the Victorian government and the Victorian construction sector have done probably a better job of supplying new homes into the market over the past 5 to 10 years. That's also a contributing factor. They've also disproportionately been units or apartments that have been fed into the system as opposed to standalone single dwellings, homes, houses that are more prevalent in other jurisdictions around the country. The kinds of properties that have sold throughout the course of 2024, there's been overrepresentation of investment properties. Now, the reason that investment properties have been sold is because, again, look, generally speaking, interest rates, affordability, cost of living, etc., has forced some investment property owners to part ways with their property. We've also had a very significant regulatory shift over the past 3 to 4 years, more regulations around renting and investment properties, as well as additional taxes that have been introduced. So that's created a sentiment, even for those that can afford to keep their investment property, but it's created a sentiment that suggests that investing in property in Victoria isn't as attractive as it is in other jurisdictions. So a lot of the properties sold this year, whether apartment or houses, have been investment properties. Now, a lot of those houses that have been sold as investment properties often haven't had the kind of refurbishment or renovation that owner-occupiers have performed in their properties. So we're seeing properties, it might be a 3-bedroom house within an area that generally has a median price for a property like that of $1.5 million, but they might be selling at $1.3 million or $1.25 million. The reason is that they maybe haven't been updated in 25 years other than sort of fundamental repairs, etc., to the properties.
Okay, yeah, you've summed that up pretty well. A couple of other things that also weren't really picked by the economists and the like was the mortgage cliff. That was managed in the end. The feared mortgage cliff from expiring fixed rate loans was staggered. It seemed that borrowers prepared for those higher repayments. And then the other thing that really went against the grain, nobody was picking just by how much the star cities were going to shine. We're talking Brisbane, Adelaide and Perth, because they really did defy all of the odds in 2024. Hey, Jacob, great to catch up with you again on the Real Estate Breakfast. Enjoy your Tuesday. Enjoy your break coming up.
Thank you so much, Craig. Have a wonderful and safe Christmas as well. We'll see you soon.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
Even if you're starting to attend viewings through December, which is a good idea given the market is a lot quieter, pre-approved are the magic words to sellers' ears.
Yeah, that's great advice, because buying property, as you say, it's very, very stressful next to planning a wedding. Not that I've ever done that. So how do you make sure that you don't get overwhelmed by this whole process?
So it's very simple. You educate yourself, you ask your questions, and you pick good people who know how to answer those questions. And the biggest thing that crops up time and time again that causes issues is people making snap decisions without fully knowing or understanding the process or what the result of those decisions would be. And look, don't get me wrong, it's not your job to understand the process. You're not here to manage how everything moves, but you do have a team of people who you're likely paying a lot of money who can advise you.
We connect you to the best real estate information across Australia. The Real Estate Podcast.